see. Test 1 2 3. Good morning. Good morning, everybody. Holy moly. It's been like 2 or 3 weeks since I've been live, and we had the Jackson Hole Symposium, and I took that week off. We had Labor Day, banking holiday, and then I took a vacation or something, and I've lost track of how long it's been since I've traded, but I'm happy and stoked to be back in the charts. So overall, I'm bullish on the market. However, I don't have an opinion as to whether it gets there by going down first or by going up first. So I'm more neutral on the short term. I have this position tool here on the chart. I saw this in fair value gap that I was anticipating it getting inverted. However, this is 2 minutes before the open, and that's against my rule set, is to engage with price prior to open. And even recently I changed my rule set so I do not engage with price within the opening macro. I just found my win rate was about half as much between 9:30 and 9:40. But here we got the close above. This is actually meeting pretty much all of my criteria, so we can tape read this trade here and see if this plays out, and wait for a better setup that meets my criteria for live trading. We have 1 minute till the open. Let's see what it does. Looks like ES took Asia low here, whereas on the NQ it took the London low. Asia low was not swept on NQ. Probably that SMT here I'm seeing right here on this SMT indicator. YM is uncoupled currently. Look at that. So here we got 9:30 open. Clean up this chart a little bit. We don't need all of this on here. So we have a couple things going on this week. We have PPI's a red folder tomorrow, and we have CPI red folder on Thursday. PPI is typically an all right day to play. The CPI, however, means prior to that Thursday, price can tend to accumulate, create lower probability conditions. Yesterday was not good price action in the AM session. I was looking. It was my first day back looking at the charts. I didn't live stream it and I didn't trade it. But that's typically expected on Mondays before CPI. And then Monday, Tuesday, Wednesday can be more consolidation, more sideways, making it harder to get higher probability conditions. And we can even kind of see that here on the 1 hour chart. I'm going to flip over there. We can see that the 1 hour is consolidating a lot of wicks and tails on these candles. It just kind of is bouncing between this fair value gap and this fair value gap. Price isn't really sure what it wants to do. And these are PD arrays. Any of these elements here are these fair value gaps, rejection blocks. Like, this is what ICT classifies as PD arrays. All of the parts and pieces of ICT concepts. You could also consider, support and resistance levels, just looking at it a little bit differently. But when price is bouncing between PD arrays or support and resistance levels, that's when I just I'm super cautious. I consider this low probability conditions. How many times it's tapped into this fair value gap and not pushed higher? How many times it's pushed through the center line of this gap here, not pushed higher? That's just a big caution for me. So paying attention to that. Let's go back and see what's happening here at the open. All right, so far price is delivering bullishly. I would consider this to be a breaker. but I'm not interested in longing that. Oh, and I've got some different candle colors on my chart currently. I usually have the black and green, like over here. And on my main chart, I switched it to like a light gray and a black. And I was super curious to see if that had a psychological effect, which I remember when I changed from red and green candles, it did. Like the red candles kind of wigged me out. And the black candles were much nicer. They just didn't wig me out when I was long and something was coming for my stop. And for some reason, it's not as bad the other way when you're short. The green candles coming for your stop don't seem to psychologically wig me out nearly as much. So anyways, I changed them to this even more neutral color pattern, this light gray and black, and I immediately liked it. So I'm curious to see. I'm not going to change around all my charts quite yet because this is the one where I'm, trading on. I'm curious to see how that plays into my psychology. And if so, I'll change out my other charts at some point, but I haven't gotten around to it quite yet. So let's see. So YM took a low right there. And now it's starting to reverse and sync up with ES and NQ. When it comes to the trades at 9:30 in that time period, I've noticed when they look more like this, when there's 20, call it 20-ish plus candles forming the inversion in the breaker, these ones tend to play out. Whereas when it's like a 3 or 4 candle setup, a breaker or an inversion right at the 9:30 open, those ones are the ones that tend to fail. But nonetheless, still, I'm being cautious around 9:30 until I study it further, just because the data from TradeZella has told me that's my worst macro, which there's a link to TradeZella below, and also this SMT indicator. If you like that, I love that it just draws these SMTs in there for you. It is a paid indicator. It's a one-time fee, really not too bad. The only paid indicator I actually even would suggest, there's a link for that one in the comments below. All right, so 9:30 is looking, NQ is not looking like it wants to distribute. If it had some, if it was going to distribute to buy side up in here, it probably would have done it. I would have anticipated it. It already retested this inversion once. We got some of these wicks here. So to me, it's looking like it actually wants to start falling. We shall see. At the moment, I don't really need ES and YM up on the screen. Targets up here, we have previous day high, previous week high, London high. So there's lots of targets up in there. But also below, there's a ton of targets. And I think I have that on my 1 hour chart. See if you can see this. Yeah, okay. Let me just make it a little smaller. Clean it up here just a little bit. So, to the top side, we have these equal highs, which act like a magnet for price when they're relatively equal or equal highs. But we also have huge amount of trendline liquidity right below. And that's where I'm pretty neutral. I feel it's going to be bullish this week, but I don't know if it's going to pop up, take these equal highs and then these equal trendline liquidity and then continue is kind of one option. Or I'm also don't have a opinion if it's going to come down first, take this trendline liquidity and then continue for the equal highs and continue on. So there's kind of two ways. My narrative's the same, or my bias is the same, but my narrative, so bias is, bullish or bearish, but my narrative is unclear. And narrative is, how is it going to get there? And that's just as important in my opinion. how is it going to get there? Like, that's the reason. And if you can fill in the how or the why it should go that way, then you have more confidence in your trades and you have more reason behind your trades. You're not just taking a random setup or model at any point in the chart. Because my model depends on where it's at in the chart. So, excuse me. So I had this tailless candle. Here's the 4-hour chart. I was noting this tailless candle, this volume imbalance. That was one of my targets on the 4-hour, was to come down and take this tailless candle. Price did not come down to the volume imbalance, but it also did not take this high up here. So kind of in this no man's land. On the 15-minute, there was a shift in market trend or change in state of delivery, depending on how you want to look at it. Let's go back over here to the 1 minute. So obviously price isn't wanting to move. It's just consolidating around the blue line, which is midnight open. So one of the things I didn't do this morning, I just didn't have enough time. I didn't do my morning routine, and so maybe I would do that here with you. One of the things I recently heard, this came from JadeCap. He was saying trading, and this just really struck me. I think it was him, Trader Kane, Umar, and I forget who, maybe it was Riz was interviewing him. And JadeCap was saying that trading is always uncomfortable. And that blew my mind, because here's JadeCap. You know, he's taken, I think it was a $2-point-something million payout. He says, you just get used to the uncomfortability. You still experience difficult times and still experience tilt. This stuff never goes away. And that blew my mind when he said that. Do not judge your progress by feelings, feeling things, tough weeks, or making mistakes. And he was talking about how he had some weeks where he just felt like he had no clue what he was doing. And I'm like, you're kidding me, JadeCap? And Trader Kane and Umar kind of second that, saying like, yeah, like this is, you know, I trade big, Trader Kane was saying, you know, he says, sometimes I risk, my risk size is equal to a house. And you have these guys here saying that trading doesn't get any easier. And what that really struck me was, but why that really struck me was because like I'm in this place of, I just thought that that was how I judged my progress, that at some point I would get better at trading and that the uncomfortabilities would go away. And it's not to say that they won't go away more, or that my capacity, our capacity, you know, for you as a trader will grow. You know, maybe it's like, oh, taking a $200 loss is slightly uncomfortable. And over time, then you're taking a $2,000 loss and that's slightly uncomfortable. But nonetheless, the idea is that our uncomfortability is always there. And that really made me feel a whole lot of things, because, you know, I'm not an expert trader. I've only been doing this for a couple of years now. And so consider myself relatively new, and to hear these guys saying that really kind of struck me. So I really liked that, wanted to share that. All right, so this is not nice. Look at that. So we have a high resistance liquidity run. High resistance meaning like it's just not going anywhere. This is low resistance, where candles are just, you know, stacking on top of each other. Low resistance, high resistance, low resistance, high resistance. So in my opinion, this breaker's failing. I don't think it's gonna. I'll still leave it up there. It's possible. I don't think it's gonna hold. We shall see. It's 9:42. Let's put some macros up. That'll help keep me on track today. I'm gonna use these ones, next macros. I like these just so I can see. Sometimes I wanna see past macros. Sometimes I wanna see future macros. I like next macros sometimes. It allows me to free up my mind a little bit. I've marked this one as red just to remind myself to stay out of trades during this time period. And then I can sit here, I can be a little more free in my mind and And part of what I love about using these little macro time windows is it's really hard to like analyze and evaluate every single candlestick. And if you break your session up into these time windows that you've already tested and have an idea if maybe they play into the success of your strategy, then what I've found is it just frees up mental capacity. And I can kind of sit here and I'm not really thinking too hard between these macros. So I'll pop them up on the screen just sometimes so I can take a break, not think too much. And even if my model appears in between these time windows, I might not take it because that's part of trading. You don't have to take every single setup you see. Plus my latte, I got an iced latte, hasn't hit bottom yet. So here's a bullish SMT. The indicator caught a 15-minute bullish SMT. It will probably confirm given that the 15-minute candle closes in 1 minute. One thing I'm seeing here is, see this tailless candle? That bugs me. It's called the devil's mark. Some people call it that. I just call it a tailless candle. Although that's not technically correct because sometimes it's a wickless candle. Sometimes it's like this is a wick is the top, a tail is the bottom. So that's a wickless candle. But nonetheless, those are high probability targets when a candle does not have a wick. The other thing I'm seeing here is I'm noticing lots of liquidity being built up here on sell side. Sell side is down here, buy side's up in here. We have the tailless candle, and we do have this trend line liquidity starting to form. But we shall see. For now, this inversion fair value gap, which is this gap right here in this candle, holding up. Price is not wanting to break out of this accumulation zone. No, 8. What's today? Tuesday? Yeah, today's Tuesday. No news. So 9:30 should have been the distribution event, and that was not the case. So we wait. We'll zoom out here on the charts. This is a 5-minute chart. 15-minute candles, 1 hour, 4 hour. So sometimes want to zoom out and just kind of see what's going on. And it starts looking like this when I'm seeing, so Asia kind of moved some, not a ton. Asia's the pink box, the Asia session, London's right after that. Not seeing, when a chart starts looking like this, I kind of want to see it distribute one way or the other. I want to see a solid move up here and then down, and maybe I would short that, or a solid move down here and just get out of this accumulation zone. Probably like that, we'll call it. Roughly, it could also be this. I'm going to call it that. This whole zone's kind of whack. Anywhere in this yellow box to me is kind of low probability conditions. 5 minutes consolidating more or less. Looking here at the 15-minute chart, same thing. A lot of sideways candles, some big wicks. There was a 15-minute change in market structure, 15-minute change in state of delivery. This series of candles closed below this series of bullish candles, but and went and took liquidity. Nothing convincing. The new day opening gap is still down here and untouched. Let's see here. 4 hour, whatever. Pull up the 4 hour chart. So this is how I look at the charts. Like, this is how I look at the markets. I look for liquidity sweeps. So here was external range liquidity. This high was taken. And then I look for a market maker sell model or buy model. So here is which is essentially a trend shift or a change in state of delivery. Here was a market maker sell model formed, sending price down to internal range liquidity. And then price tapped into this fair value gap right in here, formed another change in state of delivery, market maker buy model, came up in here for internal range. And then here was a failed, or where was it? Yeah, so here's formed a market maker sell model, came down again for more internal range, formed another market maker buy model, and it took the external range. So we can just see the buy side of the curve, the sell side of the curve, the buy side of the curve forming. And here we took this external high. Price came down for more internal liquidity. So internal is inside of this price leg, and then external is outside. So it came down for internal and then pushed up. I'm assuming it's going to take this high. And then from there, we shall see. I don't think it's going to come up for this high without retracing significantly through this price leg. But I can't predict the market. So here's 50% of this range. This candle came down not quite to 50%, but left all of this trend line liquidity down in here. So I'm anticipating some kind of move down into there at some point. All right, so it is 9:51. Excuse me, got a little itch in my nose. What's happening? Nothing. So that long idea is failing. I'm just going to completely remove it. No interest in tapering it. It's obviously going to probably fail. Here's this new inverted fair value gap. Is there any SMT up at that high? The indicator is not showing SMT up here, which it doesn't always. It catches like 80, 90% of them. So I often like to come back and check it out. So there is an SMT right here. We have between this high and this high on ES and NQ, we have an SMT, not huge. But up here with the London high is a large SMT. So there's that bearish SMT wanting to send price down. And if we see this gap here fail, if this inversion gets inverted again, another signal for low probability conditions. So here, this gap, the fair value gap got inverted and got inverted again, right? This first one. And now we have this new gap. We want to pay attention to that. So some of this local liquidity was swept. This tailless candle was swept. I can remove that. Some of this trend line liquidity was taken, and it could potentially invert this and continue bullishly because it has built this trend line liquidity right here. Is local targets. So while we're waiting for something, continuing on with kind of looking at some of my morning psychology scripts. So this one says, when you place a stop loss, assume the money has left the account and it's a business expense. That's a reminder I've been liking a lot lately. Is it just takes the stress out when you're like, when you're putting out the risk for a trade and you're like, I'm assuming this is leaving my account. It's not that stressful. You know what you're getting. Stress is not knowing what you're getting. You're like, oh, I don't know. Maybe I'll win. Maybe I'll lose. Maybe I'll make 200. Maybe I'll make 400 or 800. Like, you don't. That's stressful. Whereas it's like, I know I'm gonna lose. I'm expecting to lose this risk, and all of a sudden your mind's freed up. It's like, cool. That's totally gonna happen. Or not from a manifesting standpoint, like I'm gonna make this happen, but from just an acceptance. Like you're not holding on tightly to the outcome. And then obviously, because you know that there's a possibility you could, win the trade. Just kind of taking a look here. Okay, now I forget exactly what I was going to say about that, but we'll move on. So Wednesday for me is still low risk, one shot, one kill. That's because TradeZella has told me my Wednesdays tend to be my worst day of the week. So for now, I'm going to do Wednesdays as low risk, one shot, one kill. So this one here, this one's interesting. So I had this idea that I'm going to let go of this account that I'm trading currently, this 50K account. I'm going to let go of this 50K account as a potential sacrifice to my future progress. So the idea here is, I don't care if I toast this account, which so far I'm in the green on this account. What I'm valuing is the experience in growing the account. So I'm detached from the outcome, and I'm doing that because I was so attached to the outcome previously and the stress, like I need to make $6,000 this month on this account, and it's just toast. I didn't toast the account, but I lost all my gains and I put it into drawdown on that account. So for me, and it seems like it might seem a little backwards, but I don't care if I lose this account, which is opposite of what I felt before, because I saw traders too often not like going through accounts like they were chewing gum and not caring. And I didn't feel that was right, because you want to respect these kind of things. But it's different if you're not tilting and blowing account after account and account after account and just wanting to sit here and let go of the outcome. Like, I don't care how long it takes me to get to a payout on this account. I don't care what happens. And all of a sudden the stress is gone and I'm trading better. And so that's been one thing that's really been helping me to grow this current account. So look at this. NQ took some more liquidity. We haven't even left the opening range. So from we'll call it here. Yeah, 9 o'clock. Oh, I don't want dotted. So this is low probability conditions. Anywhere in here, low probability. We want to see something happen, which it likely might, when price starts to do this, I've noticed that what it'll happen, it'll stay low probability, it'll accumulate here in this zone, and it'll likely rip to a target without you. And then once it rips to a target, maybe Asia low, maybe somewhere previous day high or London high, that's then when it forms a clean model, is somewhere up in there. So like I was saying a few minutes ago, this gap has been inverted. This gap is inverted, so we're seeing some low probability conditions right in here, which is a bummer. This is my first day back. That's how it goes, right? So this one here, I always print these out for me. It's just helpful to have it sitting on my desk, whatever is currently relevant to me in my trading. And like this one, I was just noting my data from TradeZella that was showing that my win rate is half in the 920 to the 940 macro. So just that's a reminder. Sometimes my reminders are psychological. Sometimes my reminders are technical. This one here, just reminding myself what my current week's goals are. I set new goals for every week. And this was actually from last week of August because I haven't traded since. Hold 2R without trailing my stop close to price. I'm only going to take perfect setups. I'm going to avoid questionable setups. And I wanted to keep my risk at 200 per trade except for Wednesdays. So I'm going to mostly do that. Probably today I'll be a little lower risk because it's my first day back. Yeah, and so this is similar to what I was saying earlier if you were around, where perspective, your risk is the fee to get inside of the trade. Your risk is the fee to get in the trade. If you happen to win, great. Otherwise, treat your risk as the fee to play the game. So kind of like going on a roller coaster ride. It's the fee for the ride. So look at this this gap here, inverted tailless candle. What these candles here are doing, these candles are printing emotion. They're not printing money. And that's why my chart up here says patience pays. And that comes from Hydra. Credit to Hydra. Okay, there we go. Remember I was talking a few minutes ago, I wanted to see some kind of quick distribution out of this opening range right here. That was it. Or that's looking like it's starting to be it. I want to see it push out of here. I don't want anything to do with this accumulation zone. It's created some nice targets up in here. It's 10:01, so we had a new 1 hour and 4 hour candle. So this volume imbalance on the 4 hour that I was eyeballing has now been mitigated. This tailless candle has been mitigated. Here's this gap, this fair value gap right here, which has been holding support for a long time, all the way since yesterday at 1 p.m. Maybe you can't see it. This right here, this candle, this gap. Relative equal highs sitting right there. Equal highs up here. I mean, those targets look juicy. Maybe it's saving it for CPI. Equal highs, equal highs. It's got to go lower before it's going to go higher. But for me, looking at this, I'd be hesitant to long in here. Now that we know it wants to push down first, if you remember earlier, I was saying I didn't have a, hold on just a second, let me mark this. I had a bullish bias, but my narrative was a little unclear. I wasn't sure if it was going to take these highs first or if it was going to come down for this liquidity and then run up for these highs. So I think that's what I'm feeling like. It's going to come down in here, and somewhere down in here, once this low is taken, I could see a long right there. Zooming out here, this is a daily chart. This inversion fair value gap has been resisting price for the past, this is the third day so far. I don't really have any targets on the daily. We had these equal lows that were swept, SMT. So I see more targets to the upside on the daily. Here we're looking at the overall week, Monday and Tuesday so far. Here's midnight open on Sunday. And then the new week opening gap. So we're above these two. I'm feeling a little more bullish above them. Get below them, changes it a little bit. We stay below them, that changes my bias. And then we're running for lower targets. But for now, I think we could come down, tap into them, and then continue on, because there's been no retest of this new week opening gap. And then if we're going to look at the weekly candles, so here on the weekly is this fair value gap that's not been mitigated. Noting that, I kind of feel like it wants to create a high, take a high, take that high, so so market creates this high here, creates another high, sweeps it, and then comes down into here. And that's kind of how that's my narrative. So maybe maybe I'll leave that here on this chart for a while, make it less obvious. Where do I put it? Where can I don't want it to be on my candles. Maybe I'll put it over here. That way I can just remember what I'm thinking. There's a bullish SMT down here. After buy side was swept, or excuse me, sell side. I don't know why. I still get buy side and sell side confused half the time. Because you think like, oh, I'm down here and I'm buying. So let's take a look at the charts over here. Yeah. Okay, looks like we're getting some movement here. I'm gonna go back to over here to the 1 minute chart. So Asia low was swept, and here's an implied inverted fair value gap. But that's not my model. And price is back up in this accumulation range, which is not my favorite. I don't like it. I would like it to come out of here, form a, if there was some level right here, form a long outside of this range. That's my preference versus, and it does this sometimes where you get this accumulation range. Call this the accumulation range right here. Sweeps the range and then creates a change in state of delivery and a breaker. But here, look at this. There's a tail on that candle. So here's an inversion and a breaker. That 4-hour level is swept. That's a bad fill. I was a little slow on that one. That's okay. I'm not in this for the money right now. I'm just here to practice, learn, trade, clear up these macros, clean up this chart a little bit, which is fine. I went in with 1 just to be super light, super low risk, but still put some skin in the game for today. That fill really changed my risk to reward. I want to leave that one on the chart. So we do have the SMT. We have the liquidity sweep, a 4-hour sweep, a 4-hour fair value gap, or volume imbalance. Aligned with my bias. Nothing impressive to go in with 1 micro, obviously. And a 1.5R trade. I usually really shoot for 2R. Could have set a limit order and would have gotten a better risk to reward. I wasn't certain it was going to actually retrace. Oh, right, that's down there. So I'm looking at 1-to-1 on this one. So we had a 4-hour volume imbalance, 4-hour liquidity. We had Asia low swept. We had an SMT. So the key level was met. Liquidity, the time was in the macro. We had one mic. The only con here was forming inside the consolidation. All right, high probability targets. So we have equals London high, and then previous day high. So just a simple one mic 1-to-1 trade. Since it was a bad fill, it's okay. I'm imagining this to be the Judas swing to the downside. And given that it was high resistance here, I'm expecting lower resistance. It can come down and retest this breaker. Right here's the breaker I'm looking at. And it's actually, now that I noticed, and it's not perfect, I was eyeballing this inversion and then I saw this as a breaker, so that's not perfectly my model, which is unfortunate. So that was an error on my part. So here a limit order could have come, retest this. Could have gotten a fill on a limit. And also looking at the 15-minute, I'm seeing 15-minute looks pretty ugly, and even the 5 does. And I guess that's part of my rules, is the 5 or 15 is not looking great. I don't want anything to do with it. So I'm not going to consider this this is not a quality setup for me, which is fine. That's why I went in with one mic. Just getting my feet wet after being gone for 2 or 3 weeks. Okay, so then I noticed we have a few things going on with this trade. It formed inside a consolidation, which I don't like. It wasn't a breaker IFVG. I noticed that in hindsight. And then also I'm going to say that the 5 and 15-minute don't look great. So you either win or you learn, right? So I'm going to learn here today. I made a couple mistakes on this trade. And then the other mistake I did make is I feel like I'm market it in too late as candle was expanding. And I'm just noting that I do that, and I've had a fine time with it, because sometimes when it starts running, it just runs and you don't get a chance to re-enter. So here's this fair value gap right here. For me, that's kind of the last line of defense. If it was indeed bullish, I would want to see it respect this gap right here and continue on. I don't think it will, now that with what I'm seeing. So here, this is getting inverted again. Midnight opening is still providing resistance. We had flipped it, so I thought we would be going up, onwards and upwards. So what I am seeing here is prices at least cleaning up. We can see that the candles were super wicky over here, 9:30 open, a lot of tails, a lot of wicks. Coming down into here, it took that liquidity sweep, and then the candles are looking cleaner. So I do like that. Now it's just a matter of waiting and seeing. I'm assuming I've already lost this trade, because that's what I said earlier, right? It put the risk on the table. You assume the money has gone out of your account, and it's a coin toss. I don't know if it's a winner or a loser. I know over a sample set of trades of, call it 50 trades, I know what percentage are winners and losers, but I don't know any individual trade, if it's going to win or if it's going to lose. Put the macros back up on the screen. Let's see here. Clean up the trade a little bit. Long position. What else don't we need? We don't need the text. So I like how it tapped into the consequent encroachment of that fair value gap. You can see how it perfectly hit the median of this gap and respected it. However, it's building more trendline liquidity down in here. We're in the 1020 to 1040 macro. I would expect some kind of distribution at this point or soon. I wouldn't anticipate sideways all morning, but it could do it. Here, seeing just a consolidation right here, some zebra stripes, right? So this is the breaker. I was trying to mark it in on this candle, and I got the fill way up there. I was trying to close above the breaker, and I just mark it in on this candle, and you can see how bad that fill was. In part, a bad fill. In part, I was a little slow. So price is coming down, and it could tap that low and continue on, but I'm assuming at this point, I'm assuming I'm off sides, and it's just going to come from my stop. We shall see, though. Pull up ES and NQ, or ES and YM, excuse me. So YM is kind of selling off. It took that high, selling off. So if anything, like this makes me feel bearish now seeing this response up in here. I can see my model inversely. And here we go. Cool. I'm out, stop filled. So let's clean the chart up. You know, I can see what I already did wrong. I feel like I didn't follow my rules that great because this wasn't perfect. Which was one of the things I was looking for, is I wanted perfect. So here was the trade. There we go. So let's look at YM. I want to see YM coming down for these relative equal lows. Price still ain't moving. Okay, I guess just see what it does for a few minutes. I'm wondering, I thought that was going to be the distribution, accumulation, manipulation, distribution. And given that it wasn't, that's kind of an indication to me that it's just not going to run. I'm curious to see if it came back down for like this low or something, if it then continues. But that tells me it's not going to run right now. I'm anticipating that it would have to move to somewhere down in here probably, or somewhere up in here first. Just trading, posted my trade in my little trading community. Yeah, there's a link below if you're interested. It's free trading community. I have some free resources and just a small, tight group of friends. But if you're interested, it's free. There's a link in the description. So price is distributing. Even if I would have had my stop below this low, I would have been offside. So that's I don't know how to say that. Like it feels good, I guess, because it's always a bummer when it takes you out by a tick and then continues on your way. That's a bummer. So at least I feel better when I'm completely offsides. So for me, zooming out here, I'm expecting now that if this volume imbalance in this 4-hour low wasn't where price wanted to respond from, then for me, I'm expecting it to come all the way down into here before there's any potential for a long. Or I had it marked out on this 1-hour chart too, right? but I don't think I had a short either. I mean, my model appeared, but trying to see if I can see. So this 1 hour candle didn't sweep this liquidity, it just tapped back into this fair value gap. This 15-minute, it swept, it left all equal highs, so I had no short. I had no short setup, but short was the way to go. Maybe this is one of those situations where, so what'll sometimes happen is ES and YM will do the thing. So here YM and ES took liquidity. But not in any clear way. So for me, I didn't miss a short, and that's what I'm trying to understand is I always want to look at, well, I was off sides and my model appeared in reverse. Well, part of my model, the formation, right? Inversions and breakers. So here's a breaker, here's a breaker, here's an inversion. So there were a variety of different spots to get in on this. And for me, and this is that distribution that I was talking about. So for me, there was no way to get in on this sell. And when I was taking this long, I was expecting this move here. I took the long expecting it was just going to distribute. And it turns out that this was going to be the move. So I was just off sides, and that happens, and that's okay. It's really distributing quickly, actually. Coming down for this tailless candle on the 4 hour and this fair value gap. So all this trendline liquidity has been mitigated. See if you can see that. Yep, you can. What I would like to see here is I would like to see price come down, form some kind of retracement, and then continue lower. And the reason for that is price can't reverse without this lower high right here. Let me draw this out a little differently, maybe. Well, it's fine. And that's because it has to be able to it has to be able to create a market structure shift, come back down, and continue on for bullish delivery, right? This is a market maker buy model right here. Like this. There it goes. Whereas with this huge distribution right here, like if it doesn't create that lower high, if this is the bottom, it has no, the lower high is right there, and there's nothing for me to be able to there's so much room in here that typically I would anticipate this to just be a lower high like this kind of thing. I hope that makes sense. But I want to see a little breaker form, and that would give me confidence in a long. Put the macro times back up. All right, so just waiting. Still feeling, my bias is still bullish, and I took the long up in here. Wasn't certain if it was going to come all the way down here for the long, and I was off sides, which I feel like I didn't perform very well up in here. A number of things were wrong on this trade that I took, but hey, that happens. The goal is to document it, learn it, and not do it again. And then coming down in here, so all these gaps have been disrespected. You got to go lower to go higher. Coming down in here for this sell side liquidity and this fair value gap. Coming down in here, we also have a tailless candle on the 4-hour chart, an unmitigated fair value gap on the 4-hour chart. So that's where I was looking for, would be looking for a long as well. Which here, what I'm hoping for is I want to see some kind of breaker form, go a little bit lower, and then we can continue on upwards, something like that. So I'm gonna go go grab a fresh cup of coffee and get in a little breaker here. So it's possible. I almost feel like I shouldn't. Like I should wait for another few minutes. So what we do here, this is anticipating the breaker. And now the one mistake I made up in here, like I told myself, and I'm just refreshing my criteria for the week, my rules for the week. I had told myself I wanted perfect, and this was not perfect. It met all my criteria, but it wasn't perfect. This down in here, this is looking nice, starting to look nice, could be nice. Like this to me is nice. Now, is it on sides? Well, let's look at the time. Boy, it's not inside a macro. I'm not. Do we have any SMT forming? No SMT forming. The indicator's picking up at least. Oh, right there. So that's with YM. So it's doing it outside the macro. I'm gonna not take this one because I believe it's gonna fail. I could be wrong, but with what I'm seeing, I think this is gonna be the breaker at some point later on. I think that it's gonna come down for one more sweep, and then I think it's gonna continue. And the reason I think that is because over here created some equal lows right there. It tapped into this 4-hour tailless candle, but it did not tap into this gap. So for me, I'm anticipating lower pricing into here first. Unless I'm completely off sides, which is totally possible, right? Like, that's also the Sunday midnight open, retesting that level. And this isn't looking very pretty. So my same idea is I want to see some kind of breaker form for then this. So yeah, we'll take a coffee break. All right. Took longer than 5 minutes, but happens. So this little breaker propelled price back up into this premium of this range. Well, into the 50% probably. And that long would have played out. It was outside of the macro. Would have given the 2-to-1 I would have needed. Oops, didn't mean to do that. But I still think that what I was imagining was going to happen is going to happen. That, like, maybe this will become the breaker and that price is going to sit here and do something like this. That's my guess. And I have this big ol' inversion right here. So, I mean, that's a nice liquidity sweep right there. Be short like that. But I'm not going to take a short here. If anything, I'll just wait for that long. But I got a fresh coffee, so that makes me happy. Kind of looking around, checking things out. So it looks like one of my mentors took this long here. I was saying this implied gap is not my model. He took the long, got the 2R, and was out. I waited for the breaker, didn't get, and then got stopped out. So at least it's nice to know that I was looking the charts the same as one of my mentors. And I followed my rules, and I just got stopped out. So that's nice to see. He also took this long over in here that I was eyeballing, but that was against my rules to trade before 9:30. So he took 2 W's. Right now I see price building some liquidity down in here. Just looking around, seeing who's doing what. Nutty bars. Nutty bars short. See? Right here, he's on the 2-minute chart, but roughly the same, and He's got a stop loss above these equal highs, and he's targeting this low down in here, which I was still imagining price to come down in here myself anyway. But I didn't have any confirmations to take a short there. Oh, why is it going low quality on me? Let's see what happens to Nutty. Put it back. I actually think he might stand a chance in that trade. There's a chance, that's it, because it could come sweep this high, but given I'm actually on MNQ, I didn't see what chart he was on, but whether it was the U or the Q, but with this liquidity sweep here, it makes me feel like it's going to go down. But I don't have anything I can do in here. Oh, I'll be right back. Say goodbye to my family. Okay, had to say goodbye to my kid. We're going into town. You can see how slow price is today. This is normal characteristics heading into CPI on Thursday. And then really, it's not looking like it's going to give me anything in my session here. We can see that it's building all this liquidity this morning, and I'm wondering if during lunch, if it kind of more does a consolidation, comes down for that final sweep that I'm waiting for a PM reversal. And if that's the case, I'm imagining this is going to be more like around 1 o'clock in the afternoon. And it just kind of consolidates down here at this, well, we're at the previous day equilibrium, so that would make tons of sense for it to consolidate right around there. So for now, I'm curious to see. I don't see it happening in this macro, unless we get a distribution like this. I'm not anticipating this coming down quickly enough that I'll probably get a trade in on that macro. So should I just call it if I don't think I'm even going to get a setup? Or what's the point, right? I know it'll come, it's just going to be later. And especially being around the previous day equilibrium. Getting my stuff all situated. Let's see here. It's just consolidating. This is equal highs, trendline liquidity. What is it? 11.25. So I'm going to shut it down. I don't think it's going to do anything. Otherwise, I would just stay on stream and be able to record the trade. But I don't think it's going to do anything. So at least not in the next macro. So at which point my cutoff is noon. I stop trading because at that point it's a long time in front of the charts. So yeah, I appreciate anyone who was on stream today, and I'll be back to regularly live streaming now that I'm back from our trade.